makers and market movers. Live from Davos, Switzerland, for the World Economic Forum. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Davos for the World Economic Forum annual meeting. Now, in a few minutes, we'll speak exclusively to the JPMorgan Chief Executive of EMEA and Co-Head of Global Banking, Filippo Gori. Also this hour, we'll hear from the Novartis Chief Executive, Vas Narasimhan, the State Street Chief Executive, Ron Hanley, and the Banque de France Governor, Francois Villeroy De Galhau. Now, this week, we'll also bring you our exclusive interviews with some of the world's biggest power brokers, including the Argentinian President, Javier Milei, the NATO Secretary General Mark Rutte, Larry Fink, Chairman and Chief Executive of BlackRock, and Ruth Porat, President and Chief Investment Officer at Alphabet and Google. In the meantime, what they're looking at is, of course, Trump tariffs. Will he not? In what time frame? That's definitely what the market is looking at. So if we look at cross-asset, not only dollar, because a lot of it will be playing out, of course, on the currency market, but also equity market, financial markets, probably got an early reminder of life under President Donald Trump as initial relief about the lack of immediate sweeping tariffs on all trade partners then turned into queasiness for some as he pledged to impose levies on Mexico and Canada within weeks. So we'll have a full market roundup and trying to figure out what chief executives here in Davos are looking at. Now, President Donald Trump says he plans to enact previously threatened tariffs of as much as 25% on Mexico and Canada as soon as next month. Now, he claims America's two immediate neighbors are allowing the flow of undocumented migrants and drugs into the country.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st.
So as President Trump begins his first 100 days in office, optimism is high among big banks, even though the U.S. stock market has come down from all-time highs and bond markets have definitely whipsawed. Well, here in Davos, chief executives and business leaders are digesting the impact of Trump's initial actions. I'm delighted to be joined exclusively by Filippo Gori, JPMorgan Chase Bank's EMEA chief executive and co-head of global banking. Filippo, thank you for joining us. This is our first interview, and we're not short of news, certainly with Donald Trump being inaugurated yesterday.
Yes.
What are you telling your clients on what a Trump America First policy does to investments in Europe and elsewhere?
Listen, it's a very interesting time to be watching the news and thinking about the future and so on and so forth. When you speak to European clients, it's interesting. You get, I would say, two sides of the same coin in terms of the way people feel. On one side, there is a degree of apprehension, trades, tariffs, and so on and so forth. But on the other side, you speak to European CEOs, there's also this excitement about the opportunity that this new administration might bring to the US economy in terms of growth, the regulation, pro-business attitude, and so on and so forth. And many are actually asking, how can I take part in that incredible engine that is the US economy? So you have a little bit of both sides of the conversation happening at the same time.
So are you expecting flows actually from Europe to go to the US to take advantage of this economic, I guess, renaissance?
There is definitely a sense of people are looking at how can I structure myself in the best possible way to take part on that growth story, whether it's through M&A. Some companies are thinking about listing in the US. Some European companies are starting to thinking about listing in the US. Interestingly, I was in Asia last week. Some Asian companies as well are rethinking about listing in the US as well, which might not have been obvious a few months back. So there is definitely looking at the US as the beacon for economic growth.
So what does it mean for JPMorgan, where you're hiring less, and what you'll focus on in global banking?
From a global banking standpoint, the plan is what we set up last year, is the merger of the three lines of business, investment banking, corporate banking, commercial banking, to better serve our clients. We have began hiring plans last year. They will take on. They will continue back in 2025 for sure.
I mean, there's also everybody go back to the office from JPMorgan.
Yeah.
Have you had pushback
So from a global banking standpoint, most of the employees were already 5 days in the office. And in general, as a firm, we believed that an in-office culture brings collaboration, opportunity to mentor, grow colleagues, explore more creativity, and so on and so forth. Definitely. Every time you bring a change, there are logistical issues that people have to go through, adjustments, and so on and so forth. But broadly speaking, this was signal that we were going in that direction.
What will be your biggest challenge in the next 12 months? I mean, you have a lot to do. They brought you over from, Asia to basically run Europe and the Middle East. From a
personal standpoint, or
no, from more of a kind of business
standpoint, I would say. Definitely keep on finishing the integration of the global banking organization. Yeah. That's work that has been in the making. Literally, we're looking at things that have not been touched in 15 years or so. So there is a lot that has still to go through during the next 12 months. And then there is more that can be done in Europe. There is definitely excitement around some areas of the region, whether it's the Middle East, whether it's Africa, some products development of payments or asset and wealth management. So there is a lot that will keep me busy. Plus, I need to relocate the family back.
Yeah, which also is like a full-time job in itself. But your division has 90,000 people.
Yeah.
I mean, do you have to give more incentives, or are bankers collaborating? Again, this is like actually a huge shift. Do you need to give more incentives in terms of, to find value in working together, or is it pretty smooth so far?
No, I think actually people have enjoyed the opportunity to work together, because if you take down even internal barriers and you make it easier to deliver it to clients, to deliver holistically the firm to clients, people actually have enjoyed that. So it's been a remarkable shift, and it's incredible seeing this global banking culture coming together.
Your thoughts on the UK? Again, there's rumors of banks maybe possibly abandoning the UK in certain parts. There's been a bit of a whipsaw. Is the UK still crucial to the bank strategy?
I believe so. London is our historical home. From a JPMorgan side of the family standpoint, JPMorgan's father, Junius Spencer Morgan, actually launched JPMorgan back then in London before going back to the US. So there is no talk about abandoning London. London is still super exciting as a place, as an ecosystem where to do financial business. And from an economic standpoint, I think this current government has a clear mind of things that they want to do. They have a narrow path because they have to deal with both debt and deficit, but they are very steadfast in that approach.
What are you most excited for in the next 12 months? I mean, again, it's a big job with the division and global banking.
Yeah, there is a degree of euphoria among clients, and I call it euphoria that honestly I hadn't seen in a long time. And so that's definitely exciting that what we can be part of in terms of a company building new corporates or developing new sectors and so on and so forth is definitely exciting.
But euphoria because of change, or they haven't seen that opportunity?
Euphoria from a couple of things. On one side is as I mentioned earlier, the pro-business attitude of the new administration. On the other side, there is probably a backlog of activity. Think about monetization of assets the financial sponsor will probably need to do that hasn't taken place for the past couple of years. So there is the sense that things will happen. And I spent time 2 weeks ago with some of my colleagues in Dallas, Atlanta, and Miami, visiting clients over there. The euphoria is definitely palpable.
Does that mean more IPOs, more M&A?
So M&A for sure. I think IPOs as well will come back. There's a substantial backlog. If you think about the IPO class of 2024 at the beginning of December, so the data are from the beginning of December, 60% of the IPO class was trading above issue price. So they've done well. I think that will drag on into 2025, and that will propel more companies going public again.
And for M&A, are there specific sectors? I mean, a lot of it has already happened in terms of consolidation, but there are some industries that were a little bit left behind.
Well, if you look at Definitely, some of they are the usual suspect, whether it's healthcare, whether it's tech, whether it's consumer. In Europe, for the first time, the banking sector is becoming active, so we'll see what happens in that space.
You think, I mean, I know that you spend a lot of time thinking about European competitiveness.
Yes.
There's with the Draghi report,
Yes.
where there's a lot of capital needed. Does there need to be a capital markets union?
Absolutely. As a European, absolutely. We need the capital markets union. We need bigger European banks, because banking, whether we like it or not, is a game of scale nowadays. Whether it's what you need to invest in technology and how much you need to invest in cyber and so on and so forth. And therefore, it would be great for Europe as a region, and as a European, I feel strongly about it, that creation of pan-regional European champions that can fight on equal footing with the American banks.
Okay, so you welcome competition.
Absolutely, they keep us on our feet, and it makes it fun. It makes it more fun coming to work.
There you go, Filippo. Thank you so much for joining us. Filippo Gori, there, EMEA Chief Executive and Co-Head of Global Banking at JPMorgan. Now, much more from Davos coming up. We'll speak to Novartis Chief Executive, and of course, we'll also have a good conversation on trade and tariffs. This is Bloomberg. Welcome back, everyone. Now, President Trump has wasted no time announcing steps to implement many of his campaign pledges, including on immigration, energy, and tariffs. Well, joining us now is our editor-in-chief of Bloomberg News, John Micklethwait. John, thank you so much for joining us. I mean, you spoke to Trump not a long time ago. He talked about tariffs.
He said I was wrong about everything all my life.
Yeah,
yes.
But then actually he really explained what he was trying to do. Should we really take him at face value when he says tariff is the most beautiful word in his vocabulary?
I think yes, because it's one of the things he's really believed in all his life. It goes a long way back. I think he was somebody who wasn't in favour of NAFTA. It was very difficult to find American business people who were in that position. I think that is something that's actually core to what he wants to do. And I think probably you're going to see more in terms of China and things like that as he keeps on going ahead.
But is this a negotiating tactic? What did you learn yesterday?
I think there's a bit. I think there are two Trumps. Number one is the ideological one, which actually he doesn't believe in that many things because his main belief is himself, so to speak. But tariffs is one of the things I think he really genuinely does believe in. He's always thought about that. It's about America first. It's about all those things. The other bit is his view of himself as a negotiator, as someone who can sit down there and do things, and that is doing things and having a negotiation, whether it's with Xi Jinping or whether it's with Tim Cook, as we discovered last time. He likes the idea of the great titans of industry coming in to see him and having to do deals to get exemptions and things. And the trade policy, you can do a bit of that. It's much harder on immigration.
How should chief executives look at the next 4 years? Is this going to be volatile?
It's going to be a mixture. You already see it. Business will gain something from a president who is more deregulatory, who on the whole doesn't like taxes much. That's what they're all rejoicing at the moment. You talked to Marcel this morning. Look at the bankers. The bankers are happy as hell because firstly they think Trump will get rid of rules. But even better, he might put pressure on the Europeans who are still imposing them not to do that because it'll look so uneven. So that's one side of it. On the other hand, I still think that if you look at global commerce, someone who is stopping free trade, stopping the way in which the world has worked, and I think that's bad for business. I would also make the point that actually it's bad for the poor of the world because you look at this era of globalization, which Trump has not liked. That's been an era where billions of people have come out of poverty, and that will be a real risk in what comes ahead. But
John, on geopolitics, we don't really know what his plan for Ukraine is, and we don't really know how aggressive he wants to be against China.
My guess is that on Ukraine, I think he wants to do a deal. That's sort of very obvious. It fits with all his aims. It fits with the idea both America not being too exposed in places, and also back to that great deal doer. He wants to do that. He wants to make that work. And one of the questions there is whether Putin actually is as ready to do a deal as the Trump people suppose. You know, Putin has sacrificed a huge number of lives to gain 2 provinces of Ukraine, which seems to be the sort of deal on the table. A third of his economy is devoted to arms production and things. He may want more than he's got already, and that's going to be a difficult bit. I think with China, that is where my personal bet is that becomes a bigger and bigger issue, because there's been a kind of ceasefire at the beginning. Trump asked Xi to his inauguration. You've had a lot of stuff involving Musk. But pretty much the one thing that unites not just the right in America, but the right and the left, is a deep, abiding fear of China, and Trump does not want to be seen as a loser.
I am really looking forward to a conversation with the Argentinian president. I mean, is he the unorthodox outsider that succeeded?
Milei's great. I mean, from the point of view that he's somebody who believes this stuff.
Yeah.
You know, he is. Yeah. You know, he's named his dogs after free market economists. Yeah. He's not hanging back in any dramatic way. And the interesting thing for Milei is, you know, if you are a libertarian free market guy, how much overlap do you really have with Trump? That's quite that, because at the moment, you know, that they're brothers in arms. They think they're great, but actually the zones of their beliefs, the Venn diagram of what Milei believes and what Trump believes, the overlap is perhaps smaller than it first appears.
I can't wait for the conversation. I know it'll be explosive. John, thank you so much. John Micklethwaite, our editor-in-chief there of Bloomberg News. Now let's also look at the markets, because it's been quite volatile, Tom.
Yeah, and Fran, this is part of your conversation on the ground in Davos, of course, is how investors and how executives should be thinking about Trump policy as it comes through. And the readjustment is there, and you've seen that reflected, of course, in the US dollar. Today, European stocks taking account of what has come through in the last 24 hours. The European benchmark is currently flat. You are actually seeing some gains here in the UK. The FTSE 100 posting gains. S&P futures, US markets reopen, of course, after the holiday of yesterday. Currently pointed to gains on both the Nasdaq 100 futures and the S&P E-minis. Punting gains of 0.3%. US Treasuries are bid. Prices up, yield is down. On the benchmark 10, you're seeing a yield of 4.56 right now. Yields down 5 basis points. And by the way, across the curve, you are seeing money moving in to the sovereign debt of the US. We'll see to what extent that continues to be a theme. And that's diverged, of course, from the moves that we've seen in the Bloomberg dollar index, with the dollar gaining, of course, in the session today. But that currency has been whipsawed. Bitcoin currently at 102,000 after breaking through a record 108,000 yesterday, currently down 0.2%. Let's flip the board and have a look. Cross asset, you are seeing some pressures on the Mexican peso, on the loonie over in Canada as well, on dollar strength, and on the comments around 25% tariffs to Mexico and Canada, possibly as soon as February the 1st. Fran.
Tom, thank you so much. Now, European healthcare stocks face uncertainty this year as investors grow concerned about health policy in the U.S. Now, that's after Donald Trump nominated a prominent vaccine skeptic as health secretary, with the European sector slumping in the last few months of 2024. Well, joining us now is Vas Narasimhan, the chief executive of Novartis. Thank you for joining us. I mean, you have a lot on your plate. So, of course, you're looking at the vaccines. You have to look at this. And then there's the Trump administration. There's talk about them cutting global funding, retrenching also their beliefs in how to use healthcare. How difficult does that make the international framework?
Yeah, I actually think the concerns might be a little bit overblown from the markets. I mean, I think when I look at the priorities of the incoming administration and the incoming health secretary, it's really around tackling non-communicable diseases. And for many companies like Novartis, that is a core priority of ours as well. Our medicines tackle these diseases. And I think there's also a more openness than perhaps in the previous administration to having a pro-innovation agenda. If we can get some of the elements of public policy fixed, like the IRA and a few other elements, it could actually be a really big boon for the industry.
But your big concern could be on skeptics in terms of actually adopting. I mean, everything's shifting. So how does it impact pharmaceutical companies?
Well, I think there's the policy environment and then there's the rhetoric. And I think we can actually get to a positive policy environment. But I do think we have to be really resolute in continuing to educate the American people as well as people around the globe that our data is incredibly robust. Vaccines are incredibly safe. Our medicines are well tested and really safe to use. And I think we can manage that. that. But clearly the rhetoric is something we're going to have to tackle.
It looks like they're building like a new part of the Congress centers. Usually we're interrupted by helicopters. This is a little bit different. I mean, do you see more M&A in the industry because of the new challenges?
I mean, I think certainly M&A could pick up, and I think it's actually less driven in our sector than the FTC, rather than a real maturation in the biotech industry in terms of some of the technology. We're seeing more exciting data. So let's see. Last year we did over 30 deals, right? And so we were already quite active from an M&A and BD&L standpoint. So I think this will be a similar year, another opportunity to keep that going.
What's your biggest concern, though, for this year? Do you have to lobby? Will you go up in the U.S. more often?
I mean, our biggest priority and biggest concern is fixing the U.S. policy environment. You know, when the Biden administration put in the IRA certain rules that penalize certain classes of medicine, it was a chilling effect on innovation. I think if we can get some of those policies fixed, actually this year could be a really pivotal moment for our industry.
Yeah, but how do you do that? So again, you're a medical doctor. You know this stuff matters. Social media is also playing a role in this.
I mean, it's a complex environment for sure, and it's going to be tricky because on the one hand we have very surgical policy fixes, but on the other hand we're not in focus for this administration. I mean, I think this administration is about tax, is about immigration, is about tariffs, a whole other set of things that don't have a big impact on our sector. So I think it's more navigating the policy environment, hopefully getting to a better place, but also getting investors back on our side. If you look at it, I think the biopharmaceutical sector is way oversold. You know, when you look at 10-year lows, when we're on this renaissance of all of these new exciting medicines, and I think that's something we have to bridge now.
I mean, does the U.S. vaccine policy actually reverberate cross borders? Are you expecting other countries to potentially look at the same?
I hope not. And I actually think in the U.S., in the end, the vast majority of people trust vaccines. And they know that vaccines are one of the most important public health interventions that's ever been created by humanity. The data is incredibly robust. My background is a vaccinologist, as you know. I've studied and worked on vaccines for most of my career. They're the most important public health intervention that we have. And I think, you know, most public health institutions will hold the ground. And I think that's incredibly important.
You said Novartis is also working on some next generation weight loss drugs. How far along are you on that?
So for us, weight loss drugs is not in priority. I mean, I think we really work on the next wave that could be in the 2030s. For us right now, it's launching our breast cancer medicines, our prostate cancer medicines, our new medicines for immunology and cardiovascular disease. And that will enable us to grow actually mid-single digit or better for the remainder of this decade with very attractive margins. You know, we've completed this $130 billion transformation that you and I have talked about in the past as a pure play. And so right now, the business is firing on all cylinders. So we're thinking we're going to have a great couple of years ahead of us.
Vas, what's the big conversation being had here? I'm sure you get stopped, and what do they ask you?
Yeah, I think there's a lot of excitement about the changes in the Trump administration and how that could be a big boon for business. AI is, of course, in focus, and also AI in healthcare. And so I think that will continue to be a big topic. And I think probably how to now manage other global environment, ESG, how to actually strike the balance given the current administration in the United States.
Okay, thank you so much for joining us. That was, of course, Vas Narasimhan, the chief executive of Novartis, with a good look at what needs to be done and some of the concerns, of course, around healthcare and vaccines at the moment. Now, coming up, investors on tenterhooks for the impact of President Donald Trump's tariff plans on the global economy. We'll speak exclusively with State Street chief executive Ron O'Hanley. That's next, and this is Bloomberg. Good morning, everyone, and welcome to our special coverage live from Davos for the World Economic Forum annual meeting. I'm Francine Lacqua. Now, economists and traders are expecting the ECB to cut interest rates next week, with 2 or 3 more possibly to follow this year. But geopolitical risks, including Donald Trump's economic policies, pose a threat to the central bank's inflation targets. Well, joining us now to discuss all this is Francois Villeroy De Galhau, the governor of the Banque de France. Mr. De Galhau, thank you so much for joining us. I mean, there's a lot going on right now in the world, in the economy. Good morning. The markets are convinced that there's going to be a cut in January. Are they right?
First, we have been successful so far in disinflation, and victory against inflation is on track in the euro area. Remember, we were at more than 10% 2 years ago. We are now at 2.4 in December, and we expect an average of 2.1 this year, so very close to our target. For next week, we will see, but there is a plausible consensus that we will go on acting at each meeting, which we have successfully practiced since September. And we said from the start a meeting-by-meeting approach, which is not a quarter-by-quarter approach, let me stress it. So, and if we are decisive enough about this pace of the cuts, we probably don't need now to increase the magnitude of the cuts, which could be another debate. I wouldn't exclude this possibility for the future, but this is what I call agile pragmatism. We should be ready to act. If we go on this pace, we could be by 10% by summer. But around 2%, which is a neutral rate.
Okay, so before you get to the 2%, I mean, what would need to happen for you to pause? So first of all, pause next week. If it's not, I mean, it's almost a done deal, but what would need to happen from now until, the next meeting? And in general, what would need to happen, maybe from the Trump policies, for you to pause?
No, first we will look at inflation, including core inflation. If I look at our side of the Atlantic, I'm not very worried. I am vigilant, but not worried about inflation, including the effect of Mr. Trump's policies.
Which are not modeled. Are they modeled yet?
No, we don't know yet exactly, but there are obviously less tensions on the labor market and on the goods market in Europe. And we will see the degree of possible retaliation, but I would say that the perspective about inflation is quite assured. On core inflation, we are still at 2.7%. We expect it to fall back to 2.3 this year. And if you look at goods, manufactured goods, inflation is very low in the euro area. It's a bit more sticky on services, but it's logical. And we expect it to fall. This is already what we see in France, for example, where core inflation is around 2% already.
Could you go faster, actually, to get to that 2% neutral rate?
Depending on the news and on the flow of incoming data. I am a pragmatist, and this is what I call agile pragmatism, being ready to adjust, and we are not on a preset curve. But let us suppose we are around the 2%, so the neutral rate by summer, then we would have to assess if we stay there or if we go further. But I would say that till then, we will look at data, but probably our curve is the simplest among major central banks. If I may stress it, we were the earliest to cut rates last June. We are the lowest at 3%. We're much below the Fed or the Bank of England, which are above 4%. And we have probably the simplest task for the months to come, but it remains data dependent, pragmatism.
But so, Governor, for the moment, you can't rule out going below the neutral rate. That's fair, right? You could go below 2%, below the neutral rate?
This is not a question for now. We are at 3%, and as I said, probably there is a plausible consensus to act at each meeting.
And the data so far supports your view 100%, that actually you will do gradual.
Yes, on inflation, we are on course. The news are even a bit better than what we expected. So we'll see. Long-term rates are a different story. Because for short-term rates and monetary policy, decoupling is not an issue. We are independent on each side of the Atlantic. For long-term rates, there are spillover effects. There is some kind of co-movements. Although the levels are very different. If you look at the 10 years for German bonds, they are 2.5. And if you look at US 10 years, they are above 4.5%. But here, There is a rise, a core rise, so to say, a partial core rise due to inflation fears about fiscal policy and global uncertainty. Right. And this is what you see in term premia. There is a lesson here. We shouldn't let the benefits of monetary easing and disinflation be wasted by too lax fiscal policy or economic fragmentation. Or to put it in other words, an economic policy, in order to be efficient, must be consistent.
How do you see the moves in euro?
We see the move on growth probably slightly positive. We expect around 1% this year. And we will have an increase of real income due to the success of disinflation. So it could be a gradual recovery till next year. But this is not enough. So we need to push on structural reform. This is the Draghi and Letta agenda. And if Mr. Trump's program has a virtue for Europe, it should act as a wake-up call. Clearly, it's time to accelerate on structural reforms for growth and innovation.
Do you worry about growth in Germany and growth in the Eurozone because of Trump policies that the first time around were really against Germany?
I don't think there are huge differences among European countries. Obviously, the southern economies are now more dynamic, but remember some years ago it was exactly the opposite. No, we have a common challenge. And we must take probably the best lessons of the US economy, let us be honest. This is what I could call the three I's. We should integrate more the single market. We should invest more and better, thanks to private savings. This is the famous savings and investment union, but it's time to implement it and not only to speak about it. And the third I is to innovate more and quicker, and this is about diminishing bureaucracy. Yeah. None of these three I's has fiscal cost, by the way. So let us be decisive and take this opportunity really to wake up.
Governor, when you look at the climate change policies in the US, and we're expecting them really to be retrenched, what does it mean for your work at the central bank for mitigation?
Obviously, we regret Mr. Trump's announcement to leave the Paris Agreement. This was not a surprise, and this is what he did during his first term. But remember the positive reaction we had in 2017. We created in Paris the so-called NGFS, Network for Greening the Financial System. It's based in Paris. It's a coalition of the willing, a very enthusiastic one. We were 8 members at the start. We are now about 140 members. And this coalition of the willing, believe me, is more committed and active than ever. We published just last year a long-term climate scenario. We will publish this year the first ever short-term scenarios. And we have been tasked by the G20 presidency to work on so-called transition plans, how to reduce for financial institutions and for corporates the CO2 emissions.
Governor,
so it's a coalition approach, but it can be very efficient.
You've been very clear that actually the ECB probably has the most comfortable or easiest job right now.
I said simplest.
Simplest job, but of course we've seen a lot of market moves. In certain cases we worry about market dislocation because of the Fed and what they need to do on market adjustments. Is that a problem for the ECB?
No, as I said, monetary policies are independent on both sides of the Atlantic, and we started earlier and it was not an issue. So each monetary policy is targeted to domestic inflation, and this is the way it should proceed. Long-term interest rates are a different story.
But you could see big bond moves, right? As, I guess, bond vigilantes go around a bit like what they did in the UK 2 weeks ago.
I think the euro area is so large that it is much more stable. And this is a huge advantage of the euro, by the way. And in the euro area, fiscal policy is probably less lax, inflation is lower, short-term interest rates are lower, so there are good reasons to have this differential in long-term interest rates, about 2%, which I mentioned earlier. But again, we must run consistent economic policies, especially between monetary, fiscal, and trade policies.
Crystal clear. Mr. De Galhau, thank you so much for joining us. That was Francois Villeroy De Galhau, the governor of the Banque de France. Now, coming up, we'll speak exclusively with State Street Chief Executive Ron O'Hanley. That's next, and this is Bloomberg. Welcome back, everyone. Now, traders betting that Donald Trump's tariff plans may spur inflation and prevent future rate cuts from the Fed. Now, the lack of an overall narrative on trade restrictions so far is underscoring the risk of higher volatility across financial markets. Now, joining us to discuss all of this and the outlook for the U.S. economy, an exclusive interview with Ron O'Hanley, the chairman and chief executive of State Street, one of the world's biggest custodian banks, with over $3.5 trillion of assets under management. So, Ron, thank you so much for joining us. There's a lot to get through, trying to understand actually volatility, the Fed, the interest rate cuts. How do you see the next 12 months?
Well, I think the best way to describe it is uncertainty. Everything that the president has announced before he came in suggests that there'll be quite a few policy changes. You just referred to tariffs, restrictions on immigration, really thinking more and probably accelerating deglobalization that we've seen so far. And all of these things have inflationary pressures. On the other hand, there's deregulation that seems to be out there too. So it's, I think it's just very uncertain at this point. But I think it's fair to say that it puts the Fed in a very difficult spot now because they have to be thinking forward.
So how's this trade-off, actually, again, between growth and deregulation, but inflation going to play out for the Fed?
Well, what I think the Fed is looking at is still, which we have to remind ourselves, a very strong economy. And almost every element of the economy seems strong, but there have been signs, certainly, of moderating. Prices have moderated, economic activity has moderated a little bit, but not that much. And what they're going to watch out for now is, one, will all this activity and all this, if you will, confidence spur more economic activity and at least cause or have them consider a potential pause. Some of the things that we're talking about here in terms of the impact of tariffs, that won't become apparent right away. But it could become apparent over the medium term.
How many cuts are you expecting this year from the Fed, if any? Because, you know, a lot of people are changing their outlook, and higher for longer is the new game in town.
Yeah, so you and I talked last year, and I was very, very skeptical that there would be as many. I would not expect any more than 2 this year, would be my own prediction.
And what does that mean for asset managers? A lot of volatility, I guess, in markets, and that's opportunities.
Yeah, there's volatility. I mean, ultimately, asset managers need strong underlying economic growth. So in the short term, there'll be some concerns, and particularly around bonds, because there has been, as you know, this sense that rates are going to come down. That's favorable for bonds. So bond investors will be very wary. Again, over the medium term, there'll be some concern about U.S. debt, and between this trade-off of lower taxes and what will happen with spending? Will enough spending be cut to cover lower taxes? So there will also be some concern about debt. So everybody's going to be watching the Treasury market.
Yeah, and the Treasury market can infect other parts of the world, like we saw in the last 2 to 3 weeks. That you don't really know where that risk ends up.
It does, and also it affects confidence. And if you think about the last few crises, oftentimes they're preceded by some kind of a backup in the Treasury market. So certainly professional investors will be watching that.
Ron, do you worry about some of the Trump policies actually being inflationary, or do you think that the markets will keep that in check because we think or we understand that the president actually watches markets in real time?
So he does watch markets, and that's his reputation. On their surface, things like tariffs should be inflationary. But to the extent to which they actually get implemented and to what extent they get implemented, and are they really about a permanent tariff imposition, or are they really about some broader kind of transaction or deal that the president would like to make? And that's what we don't know.
In terms of some of the things that we're expecting for deregulation, does it mean that State Street will go into other asset classes or do more offerings? I think we're focused a lot on ETFs.
Yeah, I mean, we like our business model because we really do two things. Our largest business is custody and investment services, so we're supporting the activities of other investment managers. And then the second is investment management. And in our investment management business, we're very strong in ETFs. There's been a lot of innovation in ETFs, and as you think about it over the last 5 years, the ETF has become really the structure of choice around the world. It started out as a US phenomenon, but our biggest growth area now is in Europe as ETFs are replacing other kinds of funds. So from that perspective, we like our business model. On the regulation side, I think the prospect of deregulation, particularly if it's smart deregulation, will be helpful to lots of businesses. And in financial services, I think the hope amongst the bankers, all of us, would be that at very least that there's not more regulation put on, and then we'll go from there.
Ron, what about crypto? So I know the SEC also approved a Bitcoin ETF. Is that something that you'd be interested in looking? We're trying to figure out really when the Trump administration says we're going to put crypto at the forefront, what that looks like.
So we think of it much more broadly. We think of it as digital assets, with crypto being a subset of that. And we see digital assets very much as part of the future here. It's actually could and should be beneficial to markets to the extent to which it actually accelerates settlement periods. So digital assets and a framework, a regulatory framework for that would be very helpful. With crypto, the key issue for banks has been, are they able to custody it? Up till now, they haven't been able to, given the way the accounting rules have been applied. But to the extent to which that changes, I mean, that's then something we'd be interested in custodying.
I mean, BlackRock, with the global infrastructure partners, also really had a huge foray in infrastructure.
Yeah.
Is this the new hot asset class?
Well, I think alternatives in general and the blurring of the lines between private and public. And I think BlackRock's just a great example of that, where they will come to their investors and have a combination of public and private and not make these distinctions. So, and I think you'll see that now, you'll start to see that in some fund structures too.
So what does that mean concretely for State Street?
So for us, the way we think about it is how do you democratize these things and bring them to a broader set of investors, whether you're using the ETF or the mutual fund as that kind of structure. And we think there's lots of opportunity there.
Ron, there's so many questions, and I know participants come up to you and say, like, what do you think about this and this and this? What's the question you've been getting the most this week?
Well, what does President Trump mean? Yeah. Right, that is the single question. And it depends on who's asking it. I know there's quite a bit of concern in Europe about this. Some of it is financial, some of it is much more geopolitical, and what does it mean for alliances? What does it mean for NATO? But I think it's also starting Europeans to start thinking about, what does it mean for them as they think about their own regulatory structure? And that could be a good thing. If there's just a broad look at regulation in toto around the world and saying, there's certainly need for regulation in certain areas, but at some point do you ask, have you gone too far? And in some ways, I think those questions being spurred by the president is actually a good thing.
Ron, so interesting. Thank you so much for joining us. Ron O'Hanley there, State Street Chairman and Chief Executive. Now, much more to come here from Davos as leaders gathered here digest Donald Trump's first day of policy action. This is Bloomberg.
Essentially, with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. I think you have a lot of people that would be interested in TikTok with the United States as a partner. We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st. China charges us tariffs, and we charge them very little, except for what I did. I put a lot of, we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. I'm fine with legal immigration. I like it. We need people, and I'm absolutely fine with it. We want to have it. We need it because we're going to have a lot of companies coming in to avoid tariffs. We're the only country in the world that does this with birthright, as you know. And it's just absolutely ridiculous. But, you know, we'll see. We have very good grounds.
Some of President Trump's executive orders he signed following his inauguration. Now, President Trump has ordered the U.S. out of the Paris Climate Agreement for the second time. The withdrawal will take a year to go into effect, but signals that Trump's commitments to rapidly overhauling U.S. energy and climate policy. Well, the specter of the world's second biggest polluter leaving the accord again has already shaken global climate diplomacy. And veteran Republican Senator Marco Rubio has been confirmed as Donald Trump's Secretary of State, the first of the U.S. president's second-term nominees to be approved. Rubio, who served 14 years on the Senate Foreign Relations Committee, is one of Trump's more conventional cabinet choices. He was cleared by a vote of 99-0 in the Senate, in a sign of broad support he has amongst former colleagues. And here in Davos, the UK Chancellor, Rachel Reeves, will meet with the executives of JPMorgan and Goldman Sachs, Jamie Dimon and David Solomon. Now, Reeves is hoping to persuade company bosses to invest in the UK amid flatlining GDP and persistent inflation. In fact, we'll be hearing from more business leaders from Davos, including Ruth Porat, president of Alphabet and Google, and Sergio Armotti, chief executive of UBS. And then our John Micklethwaite also speaks to Rachel Reeves tomorrow. Now, plenty more to come on The Pulse. This week from Davos, we'll be speaking to the Google DeepMind Chief Operating Officer, Lila Ibrahim, and the Governor of the Bank of Spain, Jose Luis Escriva, amongst others. Up next, more Davos, Day 2. We look at addresses also from world leaders. This is Bloomberg.